Hey, it's Louise Bedford. Welcome back to Talking Trading. We are so excited about this particular interview. I have got the amazing Bubba Horwitz and, of course, Chris Tate in the Zoom room with me today. It is going to be an amazing event because we are going to talk about market meltdown. The markets have been crazy. Just before we actually started off with this call, all three of us were saying, oh my God, the markets suck at the moment. So we are going to be able to discuss this in depth. Three very experienced traders. A lot of you will know Christopher Tate. Chris is one of the very first authors of a best-selling book called The Art of Trading in Australia. My gosh, in that trading wilderness that was way back when, Chris was a shining star. So he's also my business partner at our website, tradinggame.com.au, where we run our mentor program. And we have been doing that for the last 22 years, which is, of course, a repeat for free course. Now, Bubba is a new person in our acquaintance, and we are loving the energy. There is so much synchronicity. He's so similar to Chris Tate, but with an American accent. They've both been trading at about the same. They've both been trading at about the same amount of time in the markets. Their views are quite similar, and that's why I thought what I'd do is I'd tweak this out and really get into the depths of how to handle the current market conditions. Market meltdown, it's really affecting all of us, and it'll be great to see what Bubba has to say. Now, Bubba is the chief market strategist of bubbatrading.com. He also has been a 36-year member of the Chicago Exchange, so he definitely has the runs on the board. I'm so excited to have both of these great traders on the show. Bubba, can you tell us a little bit more about your background?
First of all, it's great to be with you guys, Louise and Chris. It's a pleasure and an honor to share some time with you. You know, actually, this is my 44th year on the as a member of one floor or another. I actually went to the floor for the first time in 1980, but had traded previously to that, and that's basically what I've done. You know, for the last 44 years. I mean, I didn't get into the education side until the trading floors were no longer in existence, which, although just recently they've closed, they were really closed. The minute they started going to decimals, you knew that the life of a floor trader was about the end of was about done. And that was giving the advantage to the retail trader, which is what we have now. You know, they talk about this high frequency trading all the time. You hear the pundits whining about it all the time. It's amazing how high frequency trades never go higher. They only talk about when the markets are going down, but really all high frequency traders are electronic market makers, which brought the cost down for all retail traders.
Yeah. And you would have seen so many changes over that time, as have we also. I started trading 10 years after your 1980. I was 1990. And Chris Tate, when did you get going?
Oh, I'm embarrassed to admit it's only slightly after Bubba, so we're both sounding like we're dinosaurs from last century.
We're ancient.
When the world was in black and white, talking about...
You know, I go back to fractions. That was the best part of the business. You know, when you're a floor trader, everything works on speed. Yes. And if you can do fractions faster than others, you can do the spreads faster than others. And that was what the whole market was based on, was speed and being able to execute faster than anybody else.
Yeah. And I want to just push us forward into the current situation, because both of you have had to be so flexible. You've seen so many changes occur. So you've had to move with the times. Currently, we are facing very high inflation rates, very high interest rates. We've got a war going on. Things have been absolutely crazy. Now, Bubba, I'd like to hear your views on this. How do you handle times that are so uncertain? You can feel your heart increase. You can feel the bullets of sweat pop out from your forehead as you open your trading screen. I would like to hear some of your specific advice to help people through a time like this.
Well, I think the first thing you have to remember is, are you trading or are you investing? Because there's a dramatic difference in the two. If you're investing, I mean, my advice to everybody is, although I hedge personally, I use derivatives to use a hedging model, which I created, which is automated. But you know, if you're not going to use derivatives or you're not going to hedge, my advice is to always stay in. If your shares and companies are solid and fundamentally strong and you think they're going to be in business, then let's face it, the history of markets, they go up an average of 8 to 8.5% per year, and since 10% a year since 1950. So again, you can't beat that return. There's nothing that has returned more than the equity markets in history. So if you're investing, don't look so often, right? When times are tough, stop looking at the screen unless you're really intending on selling. When you're trading and you're being more active to the market, you have to first decide what you're going to trade and how you're going to trade. But no matter what's going on in the marketplace, everything comes back down to price action. It comes back to what is the chart showing me? What does it tell me? I don't care about fundamentals when I'm trading on a 10-minute or a 20-minute or a 4-minute scale. I care, can I make money? Can I make the right trade? Am I reading the market correctly, or I'm going to get with the trend for whatever period of time I'm going to trade it? That's what you're worried about. The news should be ancillary. You can't, anybody who tries to trade news, you lose, especially today. You know, you're in Australia, I'm in Las Vegas right now in my home in Vegas, okay? If you say something there, I could know about it in 3 seconds. This is not 1980 anymore, where it took forever for news to flow. You know, the jobs numbers, all the big economic data is already factored in. These big banks pay millions of dollars a year, not for inside information, but to have their people take all the data points that come out and create those numbers by themselves. So they already know what the numbers are. There is no surprises. So I say you follow the price action, and just know if you're trading, you have to have an exit. You have to have a plan, right? You just know you're going to get out. So if I make a good trade, I'm going to make as much as I can. I'm going to ride it and hold it, but I'm also going to have some defense of where I'm going to exit. And if I make a bad trade, which I do, I know where I'm getting out. And I think that's the thing, the biggest flaw in most.
So, Bubba, having that premeditated plan is so important. And Chris, your views?
I think it's one of those things where Bubba sort of touched on it when he spoke about his mind shared history, where we come from a time when the world was analog and we've had to adapt. Trading is a profession of transition and adaptability. And if you can't adapt to the transitions that are occurring, we've had a situation, particularly in the US, where since, let's call it 2009, there's been a bubble in assets. That bubble's now unwinding. And when we were chatting before coming on air, that Bubba made the point that volumes had slipped out, the world had gone quiet. That's the new reality. And the problem I think people face is they take their old reality and they try and impose it on the new reality without actually making any adjustment to what's happened in the world. And the thing that catches traders is that inability to adapt. When the world changes, you have to change. But we all get so caught up in protecting our ego and sticking with the one thing we do that we just don't make that adjustment. We just lack that intellectual flexibility.
And have you got any tips how? Yeah, have you got any tips so you can adjust though? Because I think people do get stuck in their own way, and that blocks them from their goals.
I think what happens is that the advantage Bubba and I have is we're old school, which means we've seen God knows what. And the one thing you learn when seeing these things is, yes, markets go through periods where they trend very well. They go through periods where they're slack and they, to use Bubba's highly technical term, suck. And they go down and then they recover. But I think if you're brought up in an environment where markets have only ever gone up and not looked back, it's that looking back that people refuse to do. And this is what catches traders. Traders don't learn from history. And there's so much history to learn from in markets, because all we merely do is repeat the same thing over and over and over again. We don't do anything new. The South Sea bubble from approximately 300 years ago is Bitcoin, and nothing's changed. They even look the same on the chart. So it's understanding that we have history. And this is the advantage that us old buggers like Bubba and I have, is we have history, so that when things begin to change, you just go, Yeah, been there, done that. Let's move on to the next thing, please.
Because it feels
amazing,
familiar.
Chris, that you talk about the South Sea bubble, because that was where Sir Isaac Newton was a billionaire at the time, and he couldn't control himself. He couldn't stay out of the market. He got back in and he died a pauper. And the funniest thing about the South Sea bubble is that the final debt payment was just made a few years ago, and that was from 1735.
Which is quite remarkable. We've stayed in a hotel in London, which sits near St Thomas Guy's Hospital. Thomas Guy paid for that hospital to be built from his profits from the South Sea bubble, because unlike Newton, he could control himself. So nothing changes.
Right. You're right. Listen, I couldn't have said it better myself.
So for everybody who's going through some pain at the moment, then Bubba, what would you say to them? What strategies can they implement in their own lives to help them through this time?
Well, I think that part of struggles that traders have is that we create our own struggle. We don't learn from history. We don't look at the market objectively. Most of us have to have some sort of an opinion as we walk in. Now, you should never really have an opinion as to what the market is going to do, because the market itself, I mean, Chris pointed it out so perfectly that it repeats itself over and over again. And we talk about that, and it doesn't matter what time frame you trade, the same patterns occur hour after hour, day after day, month after month, and they're always going to be the same. They may not be from the same reason, but you don't care what the reason is. You care what the price is, and is it breaking out from consolidation into a new trend, or is it going to stay sucking in consolidation and making it challenging, or is it breaking down, or are you seeing a panic, which is either up or down? And when you see that panic, how do you react to it? Do you try to chase along with them, or do you do with the smart trade, which is to either buy from them or sell to them if they're panicking? We call that a blow-off phase. That happens all the time. I mean, we trade that live. You know, during the day, I trade 4-minute charts in the futures markets. We trade those patterns all day long. So all we're watching, congestion, breakout, and blow-off. And the only pattern we're looking to trade on a part-time basis is the blow-off pattern. When people panic, we want to give them whatever they want, because from a floor trading view, and this is where I have some different advantages, is we had a saying: when you can see their tonsils, give them whatever they want, because they're wrong. And that was you go back and you had to be pretty much emotionless on the trading floor, or they'd have hammered you. Okay, because the other traders can sense blood and they're going to go after you. And that's one of the things you learn about understanding how the markets work and function.
But you were looking at like the physical cues there. You were looking at their demeanor so that you could have that eye-to-eye contact. And so was Chris, because Chris was floor trading as well. Now there are different clues. I'd be curious to hear your views. Chris, you had a point.
No, I was just going to say, Bubba's point's perfectly made, in that it is the simplicity of it. It's having a tiny toolbox that you can apply over and over and over again. And this is one of the things we encounter with traders, in that they have this enormous belief that trading is this great quantitative sort of monster where they have to master thousands of things. And it's very, very difficult to get across to people that if you have a single hammer, and let's say your hammer is a breakout from consolidation, if you can master doing that and your emotions around that breakout, then you'll be immensely successful. But it's so hard to convince people that it is often that simple.
You were like in parallel universes, Chris. You know, I mean, yeah, go ahead, Louise. I'm sorry, I didn't mean to interrupt.
I was just going to say, people are the same everywhere. They just are.
I mean, it's amazing that you just, again, it's really simple. It's trading is not hard. The traders make it hard. Yeah. Okay, look, it's hard mentally and emotionally, right? I mean, you know, you lose money. Nobody wants to lose money. And you're going to go, I don't care how good you are as a trader, you're going to go into a losing streak. It happens, right? There's a name for it. It's called drawdown. Okay, it's going to happen. And basically, if you can learn from the drawdown, you can actually capitalize off of your drawdowns when you understand what you're trying to do. But what Chris was saying, I think, is that people get too sophisticated. You know, just even in the option market, yeah. You know, they talk about all the different Greeks, and I go, what do I care about the Greeks? I know what they are, but it doesn't matter. They're not important to what you're trying to do here. Okay. Greeks are for traders that are trying to arbitrage something that you couldn't do as a retail trader anyways. So what's the point? But people want to make it, they look at these ridiculous systems. There's no automation system that's going to work at a rate that they advertise. Okay. We use an algorithm for a lot of things that hits at 66%. So we recognize that, we know, and we draw down to a certain point that we can, if we have enough capital, we can take a bigger position, knowing that the math is in our favor. But the model itself is as a game, it's a big math model, and it's no different than playing poker, gin, bridge, or backgammon. Those are all mathematical games of certainty that you're not going to win every time because there's still an element of luck. But if you master those crafts and you master the math of what you're trying to do, then over time, you're going to grind out the profit you're trying to get to. And that's what most people refuse to understand. They have to let their emotions play out, and that's always a mistake.
Yeah, I love it. I think also we're dealing with people who are keen on visualizing the future for themselves. And sometimes when you shake that future, it's an identity threat, but it's also a future visualization threat. And that's where I think people are having difficulty right now. They, especially with Bitcoin, they decided that they were going to learn about Bitcoin and it was going to be their absolute savior. It was going to fix every area of their life. They imbued too much meaning in the one instrument. And that is where we start to ignore our signals. We ignore our stops. We ignore the macroeconomic environment. And that's where we end up in trouble. Chris, you've talked about we have to be careful about trading becoming a religion when we're following a particular instrument. I would love you to share your views with Bubba on that.
I think my view is quite a simple one, in that people think that the instrument will save them somehow, that if they just trade this one thing and this one thing only, then it's like winning the lottery, when it's not the instrument itself, it's the person who drives the damn system. If you can control yourself, if you have a system that works, you can apply it universally. And a good system is fractal, which means that you can apply it over any time frame, over any instrument, but it only works that way because it's simple and because you've got control of yourself. The great problem with these speculative bubbles that we see, particularly in these nonsense things, NFTs, non-fungible tokens, which is literally just a GIF image that people pay millions for, is that it becomes an obsession. And it's the tail end of idiocy. And it's as stupid as the Dutch tulip boom was, which literally stopped the Dutch from being a global empire. It just wrecked their economy. That was the end of it. And so it comes back to this notion that the instrument won't save you. You'll save yourself. And I don't care what the people on the internet say or the commercials you've seen pumping crypto say. Nothing saves you. You save yourself. And you save yourself, like Bubba said, by not making it hard. And if you don't make it hard, then by definition, you don't want to say it becomes easy, but the process becomes easy, or the process becomes simple.
And I think both of you are talking about looking to eradicate bias. So Bubba, you were mentioning about having a preconsidered plan, which is something that Chris and I are very much into as well. Knowing what you're going to do prior to the actual action occurring in the markets. Could you tell us about some of the other methods that you use to maintain objectivity and to limit bias?
Well, the first thing I do, and I do have a little bit of a bias by nature, because I am part of the media, right? I do a lot of media, so I have to give them an opinion, but I'm only going to give, my opinion is going to be based on where my algorithm sits, long or short. But when I'm trading, I know better, right? I don't watch the news. I think those who try to watch the news all day, financial news, you're making a huge mistake, because it's going to misguide you. It's going to mislead you. And most of the people there have no idea how markets work anyways. So you're getting, a story, and if you ever thought about it, and I always prided myself in being the only guest that traded my own account only. I don't trade anybody else's money. I've only traded my own. And I think you have to be able to set yourself up on a stage or in a plan for everything you're going to do, because if you're going to invest, that's one plan. If you're going to trade futures on a short-term basis, that's a second plan. If you're going to trade options, that's a third plan. And you can't be, you can't wake up in the morning and say, I'm going to come in and buy them today because they're going higher. You have to observe the market. You have to observe the price action and make your decision based on what the market is dictating to you and what phase is the market in. Is it overbought? Is it oversold? How do you know? And how can you see that? Well, the volume will show you a lot more than anything else. We all know about the Bollinger Bands, and I'm not against Bollinger Bands, but again, all they are is a mathematical model that's 2 standard deviations away from the mean. You should be able to spot that. If you're watching the chart correctly, you should be able to see that without the bands there. There's no magic sauce that suddenly comes in. The magic is really, like I teach the phases of the market, which is just consolidation, breakout, and blow off. That's it. That's what the market does on all time frames, all the time. So you got to be prepared, but you have to, every morning you walk in with an open mind. And, I traded on the floor through the 87 crash. Okay. I traded on the floor through the 2001 crash in the NASDAQ, and I traded on the floor through 08. So I watched in 1987, retail investors were buying puts, which is an option to short the market, as if the market was going below zero. Okay. Now think about that and how dumb that is when you look at it, because all you have to do is understand the math. And if you know that you're buying the right to buy the stock at -2, probably not a very good idea, right? So, nobody wants to take the time. They want to panic. They want to be involved, and they can't control themselves. And that's the biggest thing, is self-control, and stay away from trying to have an opinion. Yeah, we can all think about what we think. I think the economy sucks. I think we're in a recession. I think the central banks around the globe are all fraudulent crooks. Okay. But all that being said, I'm going to still go to work every morning, or how, I trade. If I'm up, I'm usually trading, right? Okay. Because the markets are open. So I'm going to trade what the market tells me to trade. I'm going to trade what I see. I'm not going to go in biased with either a long or a short opinion. I may have one, but I have to rely on the price action. That's how I do it. And it's the same as, remember Brexit?
Yeah.
I traded for 36 hours straight when Brexit was going on. That's how busy the markets were for 3 days, 2.5 full days. And whatever it was, I didn't care. What do I care? I traded the elections too. You just give me action, give me paper, give me order flow. I'll trade it.
Yeah, the name's irrelevant, but you make a good point about, and I think sort of, if I understood you correctly, as a trader, you have to have multiple personalities. You have to have a personality that you share with your spouse. You have to have a personality that you share with the media when they ask you questions. You have to have a personality you share with students and others. And you have your own personality, which is the trader. And the trader is this unbiased, non-story individual who just responds to the data. And in ways, it's a wonderfully schizophrenic profession. Many aspects that, and you have to juggle these things. It's one of those things where you can't have been absolutely malleted during the day and then go in at dinner and tell your spouse you've been malleted. There are certain things about the business that remain the preserve of the trader and only the trader.
There's nothing better than getting drilled during a trading day and going home, and your wife said the air conditioner broke, and the kids say, "Dad, can we have money? You just lost 50,000." And they're asking for everything, right? And you have to say, "Sure, what do you need?" Right?
Yeah.
Yeah. I've had my car for 2 years. I think we should change it. All right, I'll just check my pockets, because yeah.
I think also that ability to maintain that consistency of emotion is something that the three of us are always striving for. But the thing that I'm really interested in too, because all of us have had such a long time in the market, how do you maintain your energy? Because consistency is the name of the game, not consistency of results, unfortunately, because it doesn't have any bearing on what you're doing in the end. You just need to think long term in terms of your consistent actions and habits that will eventually bring you to the results. Bubba, how do you keep your energy up? How do you avoid burnout? I'm curious about that.
I tell you how. I love it. I love what I do. I love the markets. I love to play games. Okay, I play poker in my free time. Okay, I played when I first started trading. I made the first 6 months, I made a living playing gin and backgammon. Okay. So again, what I'm saying is that I truly love what I do. Yes, I make a nice living from doing that. It's afforded me a lifestyle, but I really enjoy what I do. And I think that's what gives me the energy, because I always tell everybody, I'm going to drop dead and it'll be on a computer, because I'll be watching the market more than likely, because that's what I do. You know, in my free time, I'm either playing poker somewhere or having a cocktail with my wife or trading. Okay. You know, again, that's just, I just enjoy the understanding and being part of it, because I think that it is such a great opportunity if you can control yourself. And unfortunately, a big number of people cannot. Okay. Just like Bitcoin. I know that Chris says it's a big bubble. I say, I believe in it. Okay. But again, in full disclosure, I own some, but I've told everybody that listens to me that I own it, and we trade it in our portfolio, but I own some, and I'm prepared for it to go to zero. So if I'm wrong and it is a bubble, then I've accounted for zero. Okay. If I'm wrong, I happen to believe in the concept, and I believe it's the currency of the libertarian. It may not be Bitcoin itself, but something that is free of the central banking system. So, but I didn't get crazy, and I'm not, like I said, if it goes to zero tomorrow, I will not lose 1 minute's sleep, I promise. Okay. But I do think that it's got a potential to be real. Okay. But the price action, to your point, Chris, was very bubblicious when it got up to 70,000 on nothing. And again, it's something that, I talk about it every Monday night, and I said, hell, if it goes to 10,000, I wouldn't be surprised. Okay. I'm not shocked by the action. It's a wild animal. Okay. But again, I think you just have to really enjoy what you do, but enjoyment comes from success as well. And also being able to deal with failure, because we all fail, right? We all go through, as I said earlier, we all go through losing streaks. There ain't, my famous words are, there ain't nobody on the street corner handing out $100 bills. Okay. You got to work for it.
It's so true. And I think the other aspect is managing to keep your ego out of the way. One of the things that I think has come through in what you've said about Bitcoin is, even if you do believe in it, it's important not to have everything in it. You don't have that position size that is going to threaten your lifestyle and threaten your overall results in any position, not just
Ever.
The actual. Yeah, absolutely. Chris,
you're 100% right.
Can you tell us more about? Yeah. Tell us more about the role of risk here, Chris. Give us an idea of your views about position sizing and the importance in risk management.
Again, it's that thing that it's sort of linked in with this notion that an instrument will save you. And so what happens is that people will go all in on a single thing, and it doesn't save them, it devastates them. And unfortunately, a lot of the stories around crypto at present, but a lot of the very sad stories are about particularly young people who went all in, remortgaged their homes, took everything, poured it into one of these obscure coins, and it vaporized. And
right.
An inability to understand. See, I think the ultimate defensive strategy is like Bubba's. If you can afford for something to go to zero, then you're completely immune from destruction. You're absolutely immune. And it's not a sort of being like an ostrich with your head in the sand and pretending it hasn't happened. It's just simply saying that, well, as a percentage of the overall portfolio I have and instruments I have, yes, it's a dint, but I can still turn the lights on. I can still eat. I don't have to get a job.
Right.
People misunderstand risk completely, and they seem to work on a, let's call it a lottery fallacy, that all in, win big, as opposed to not all in, win small, consistently get rich. And it's this terrible thing with trading that people think that what they'll do is put everything in an instrument on Monday, retire on Wednesday, go buy an island on Friday, and that's it. And that's not how it works. We all know that it can be a grind at times. And as Bubba keeps saying, if you can't deal with the fact that you're going to have losing streaks, you really shouldn't be playing the game. But you can only handle the losing streaks because you realize they're not going to kill you. they're unpleasant. They're like turbulence in an airplane. They're not fun, but it's not going to kill you.
They're part of the business. That's what you have to recognize. And you know what really bothers me, Chris and Louise, I hate the scam advertising that is out there, because that they foster a lot of this ridiculous hope, because hope never made anybody any money. Okay, hope never made a trader. Traders, you have to learn, you have to study markets, you have to understand what you're trying to do with inside that market and understand the price action that it creates. Notice how we got back to price action already, but you got to understand what it creates. You can't, there is no magic. There's no magic formula. The magic is inside you and that demon in between your ears. That's a person that you got to deal with. But too many places foster that false hope of, lottery winnings, and risk management is huge. And if you're trading straight shares, and if you're using margin, remember that your risk is really on the amount that you're leveraging, not on the amount of margin that you took. No, people don't realize that. And all of a sudden, the security moves against them and they get a phone call, margin call. Well, what do you mean? I put it, oh, well, that ain't enough, right? I mean, but you have to remember that if you're going to use leverage or margin, that the risk is based on the underlying that your margin, the amount that you're leveraging, not the amount of margin you put up to post it. Okay. And I teach how to make synthetic stock out of options. And I say, you can't go, you got to start out at 2-to-1 leverage, because your leverage, even there, yes, the options have a limit to how much they can lose, but they lose faster because they're still based. If you're using, something that costs you 1,000 to leverage 32,000, the 1,000 evaporates a lot faster, because it's based on 32,000, not based on 1,000. So you have to have enough capital, depending, and there's different products. Okay. I tell people, if you're going to use margin, you have to have 3 times the margin in your account for every trade. So if you're going to leverage up and use 20,000 out of the margin, you got to have 60,000 in cash, because you're going to have to do what? Suffer through a drawdown. And one thing I've learned, Chris and Louise, they never announce when they're going to sell off your portfolio. They never tell you when you're going to go do a drawdown. Suddenly all of a sudden you find out you're in a losing streak.
It's so unfair, isn't it?
Nobody gives you a little tap on the shoulder and says, next Friday, don't put anything in your calendar, because
it's going to be big. It's funny. I'll tell you one quick story. I got a lot of stories, but this is, before all this information, before the internet, when I started trading in 1980 on the floor, we didn't have emails, we didn't have phones, we didn't have, we had 50 traders that shared one big office. We all had our own little offices, but the meeting room had 2 12-inch LED monitors, which weren't Windows based, they were DOS based, and all they were Quotrons. But in those days, now you get your statement, you can log in and look at it anytime you want, you get it emailed to you. We had to go to the risk manager to get our statements every morning. And you had to tap on his shoulder, and he'd look at you, and he wouldn't look at anything. He'd go right to the bottom of the delta, and he'd say, "Are you getting out of this, or am I getting you out?" Yeah. The tap on the shoulder. So
these giant printout pages, and you'd go, "Oh, that's a bad number, isn't it?" And they go,
"Have you go to the principal's office to get your statements?"
And the interesting aspect with that too is that I do see that lack of accountability in our traders today playing a role. You too, you had accountability. You did have somebody to tap you on the shoulder. Now, for traders, we have to tap ourselves on the shoulder. We have to be the ones who say, okay, this is our rule, and we've gone under that rule, so we have to exit. It's really important that we become accountable for ourselves.
No, I think that, again, this is why you have to have a plan. You don't have, when you're trading on your own, and obviously with COVID, it born more traders, or not, let's not call them traders. It bore more people that wanted to throw away their money. Okay. Because it didn't born traders. Yeah. But if you walk in without a plan and without the discipline to manage your money, you're throwing it in the garbage can. Okay. Because you're not gonna win. You're not gonna make money over time. It doesn't work that way. Too many people go all in, like these meme stocks right now. I mean, what a joke they are, but they're crazy, but they got players, right? Because it's the wild animal right now. It was the same as Bitcoin and all the other things that get wild. And what happened when it gets wild, everybody wants to participate. And just, we go back to the 90s, okay, in the internet bubble, all those guys were firing and making every day. A new one's coming out. I'm going to make a fortune. You know what happened? Most of them went broke. And not only did they go broke, but they had a tax bill due the next year that the money they'd already lost. So, again, I think that you have to be disciplined and treat it as a business. Trading is not fun and games. I love it like fun and games, but it's still a business. I still got to pay my bills. The mortgage collector does not let me pass if I have a bad month. I still got to pay him, right? So I still got to pay the pool guy when he comes to clean my pool. I still got to pay him. No matter how I did, I can't say, well, I had a bad month, I can't pay you this month, right? You got to pay them. So you better make sure that your business, because this is a business, this is my business, this is what I do, okay? You better make sure that you're allocating funds properly and not putting yourself in major jeopardy. And if a trade can wipe out more than 10% of your portfolio at any one time, you're way over leveraged. You shouldn't be more than 2 or 3% invested at any one time on one security that can take you out, okay? And if you don't believe me, ask optionsellers.com. I think James Corvalero, whatever his name was, he sent out a crying video to everybody when he lost everybody's money, natural gas.
Yeah.
Yeah.
I remember that. But that's it. But people's egos get in the way. And it's that male play big, win big thing. And it's that not understanding that it's a business, that you turn up every day, the bell rings, and you leave when the screens switch themselves off. There are all sorts, just on LinkedIn this morning, and it drives me insane because LinkedIn should not attract these people. There was somebody there flogging their trading system, and they put up their equity curve, and it started here and it ended there, and it was a straight line. There were no dips.
Yeah.
That's realistic.
Liar. Yeah.
And there's all these people underneath, and LinkedIn is supposed to be a professional platform, going, oh, it's brilliant, it's best I've ever seen. And I'm thinking, look, to be blunt, you're just a bullshit artist. You're trying to steal off people. And
Right.
It's not right. An equity curve without lumps and bumps is not a real business. Because if you're running a restaurant, there are days, weeks, months where running a restaurant must really suck. People don't come in, you fall out of favor, you've got staffing issues, you don't make as much money. So when you look at your profit and loss at the end of the year, it's not, oh, made a lot. It's made quite a bit, not much. Oh, broke even. That's how businesses work.
Really? I thought we were stealing. What are you talking about? I thought this was free money. Aren't they passing it out? My equity curve goes like that after it goes down there first, right? I mean, again, look at, you should, and that's another thing. See, people should be able to spot, right? You cannot fall for the scam or the con games that come along. Anytime there's money involved and you have an opportunity to make a reasonable amount of money, there's always a scam.
Yeah.
If the crypto world is real, okay, there's still inside of there's many scams. Okay, if it's real, there's many. Listen, the central banking system's a scam. It's nothing but a Ponzi scheme, anyways. That's another story for another day.
I want to move on to a quiz with the two of you. I've been thinking, the more I've got to know you, Bubba, the more I really do think that you and Chris Tate are like brothers from another trading mother. So I want to explore this. I would like to ask you questions. Bubba, you answer first and then Chris, and then next question, Chris answers first and then you.
Can't I copy of it, Chris?
I want to explore this and see where you're at.
Yeah.
So, Bubba, are you an introvert or an extrovert?
I'm not sure. Sometimes when I'm like now, I'm more of an extrovert, but many times if I'm just quietly observing, I'm an introvert. I kind of switch back and forth because I'm also very quiet and subdued when I'm around crowds because I'd rather listen. It's kind of like watching a chart, okay, and being observant. And I'd rather be observant then be open. But of course, when I was on the floor trading, I couldn't be like that. I had to go after it. So I think I'm both. And I think I can adapt, which I think helps my trading as well.
And Chris?
Like Bubba, it depends on the situation. When I'm teaching, extroverted. When I'm not, introverted. My favorite thing is just sit at my local coffee shop and just watch people.
Yeah.
And just observe.
Yeah. So as a listener for Talking Trading, look for the differences as well as the similarities. You know, there are a lot of things that we've discussed in this interview so far. Even if you don't understand the technicalities because you're a beginner, realize what the commonalities between these traders are. They are disciplined. They lack ego. They focus on the data, and they are very plan and structure oriented. So look for those similarities. What about, Chris, your average hold time across your different systems?
Depends on the instrument. I mean, weekly equities is weeks and weeks and weeks, months, years, down to my 4-hourly FX system, which, you know, can be down to the trading session. If it doesn't work straight away, then it's done.
Bubba?
Well, I mean, that's a good question. And it could be, I mean, there's things that I'll hold, you know, and you're talking about trading wise, but we've held positions because of the algorithm. If it keeps us in, I was in 2019, I think we're along the NASDAQ for 48 weeks.
Yeah.
Okay. Now, conversely, when I'm day trading on a 4-minute chart, 4 minutes is a long-term capital gain. Yes. So, you know, again, it really depends on the instrument. It depends on what my objective is for what I'm doing. Because if I'm investing or I'm using longer term stuff like this, for example, when in my futures portfolio models, I don't get out during the day. We never make a trade during the trading day. If the algorithm is going to change directions, we do it overnight and then we recognize it. So I'm never going to make a trade during the day, right? I'm only entering or exiting once during that day and then it's over. But my day trading can go, you know, if it's busy, I can trade for 10 hours straight. Okay. So, and, you know, they're in and out of, I mean, you know, when I was a floor trader, I would trade 50,000 option contracts a day. Okay. So it really depends.
Yeah, this is good. I think what we're talking about here is mental flexibility, being able to match the time frame to the instrument as well as your overall goals. Because so often Chris and I, with our traders that come to us with the beginners through the mentor program, they say that their goal is to spend more time with their family, but they're trying to trade 4-minute tick charts. Completely opposite to what that goal would actually bring about. And
well, can I ask you a question, Louise?
Yeah.
You find, I think I find that most people don't recognize the difference, and they believe, you know, it's like, I got to make $100 a day, whatever the number happens to be. And I go, you can't, your goal cannot be based on $100 a day. It has to be based on a longer time frame. It has to be based on success versus failure. What do you think about that?
Absolutely. Chris and I are often looking at people's results. So because we've got access to so many of our mentorees' trading results, we actually see the specifics of what they're trading, when and how. Now, one of the things that we've noticed with those results is that the people who do the best are the ones that stick to a very limited area of their expertise, and they don't flick around all over the place. They don't chase the latest shiny object. Chris, what are your thoughts? That's kind of what
Chris said early in the interview.
Yeah.
But it's that thing of alignment. Bubba's point, I think, is spot on. The market doesn't pay you a salary, and people come to the market with the sort of mentality of a wage earner, that the market will pay me X amount per day. On some of my systems, they've gone 9 months without making any money, and all the money is made in the back end of the 3 at the end of the year. And you have to be able to tolerate that, and to tolerate that uncertainty, and to realize that the moment you own a business, it's lumpy. Cash flow is lumpy. So you have to have the capacity to deal with that, both financially and emotionally, and not be wedded to this notion that it's going to pay you a salary. This is why I think that the notion of continual options writing gains such traction, that people who write naked options all the time, is that they believe that the market is giving them free money. And it, right up until the moment it cuts your head off. And so the asymmetry of the payoff is not really good, but it's part of that mindset that people have.
Yeah. And Bubba, what's the best thing about trading?
Well, I mean, there's a lot of best things, but I mean, one of my favorite things is that, you know, I have total control. And if markets are quiet and I feel like going to the golf course, I can go to the golf course because I can take the time off. You know, as a floor trader, more often than as a retail trader, but as a floor trader, we used to play golf a lot because if it was really quiet, I knew that if I stayed there, I could find a mirage of a trade that didn't exist, right? And it was easier to walk away than sit there and stare at the paint drying. So I get total control over what I want to do and how I want to handle myself, because there are certain points during any day that markets are quieter than others. So if I'm trying to be active, but the markets aren't prepared for active trading, it's better to sometimes walk away. So I think that's one of the things I like. And I like obviously like the money that you can make if you're grow properly. You know, you can't make it tomorrow. You know, anybody who thinks they're going to start with 5,000 and make it 100,000 tomorrow is out of their mind. They have no chance to do that. I mean, it was virtually an impossible. It would take an unbelievable miracle, and would be for every one person that could do it, it'd be 1,000 or 2,000 or 5,000 or 10,000 people that would fail. It just doesn't work, and you have to be prepared for the grind. And I think that's what trading is. It makes it a grind, which is part of a longer game, right? You're playing a longer game when you're playing this. If you look at it as a game, which I do, I'm playing the game for the long haul. Okay, I know that I can't win every hand, but I know that I can win over time. So I have to be prepared for those instances to win the game over time.
Oh my gosh, there's so much in what you've just said there. Chris, you're often referring to the grind. We always talk about average over time instead of aiming to get the money to come out of the market in some particular way, the way we think it should. You know, you can only get what the market is going to give you.
You have to embrace the suck. It's as simple as
that. Embrace the suck.
Sometimes it sucks.
He's right. I mean, you know, again, you know, like I said, you know, I trade every morning for an hour. I trade the opening hour with my members, and I go, look, you should go to lunch, go to the pool, go play golf, leave me alone. There's nothing to do here. It's too hard. And again, I don't need you to, you know, you want to stay and listen, I'm going to stay and comment, you know, for the full time. But if it were me and I could leave, I'd be gone already. Okay.
Yeah.
I love it. And Chris, what do you think the best part about trading is for you?
Look, I'll answer that with a sort of a story. Sometimes negative reinforcement is a powerful thing. I was going to training the other morning with an old friend of mine. I was heading out to meet him, and it was very, very early in the morning. And I saw this guy walking towards the station with his briefcase. And I thought, well, it's 7 o'clock in the morning, so it's far too early to be getting on a damn train in the cold because we're in the middle of winter. And I imagine that the only thing he had in his briefcase was probably an apple, the lunch his wife had made, and a copy of the daily paper. And he was going to do that until he dropped dead. And I thought, thank God I don't do that. Because the best thing about trading is you don't have to do certain things. And as Bubba says, if you want to head out and do something else, you can, because the time is your own. That requires a degree of responsibility that a lot of people don't have, but the time's your own. If you want to go somewhere, do something, it just affords you that flexibility. And let's make no bones about it, the money is also very nice.
You know what else is good? I can take my lap down to my pool and go trade by the pool.
Yeah.
I mean I can go, I can trade up my phone. You know, when I fly back and forth, if the markets are open, I can trade, you know, if I want to. I mean, I'm not advocating that people be that active, but I can keep my eye on things from wherever I'm at.
Yeah.
And if it changes, I can get involved.
Yeah.
Yeah.
And if it doesn't change, but I don't have to stare at it. And that's what I like about it. You know, me, I get up at 1:30 every day and go to the health club every morning. Okay, I start at 1:30, I go to the health club, work out for an hour and a half, come back to work, start writing, start trading, and start going. And I go all day long. And again, I love it. So it's not work to me. It's a hobby.
Yeah, I love it. So, Bubba, I could keep talking to you forever, actually. But I think what we need to do is find out so that you can actually tell people where they can contact you and get in touch with you. So, can you give us an idea about the services you offer and how people can get in touch?
Well, we do we have an option service, and we have from trading stock options to futures models. But we do have something that's really pretty special right now. And I think it really works good because of the clock difference as well, and from one side of the world to the other, because I can't tell a time, right? I kept trying to figure out what time zone I was in. And the bottom line is that, I teach, but I also have models that are executed by Capital Trading Group, who's a partner with me on this day trading model. And obviously the day trading is done when most people in Australia are sleeping, right? So, I do have many members that are from Australia, and, I got to wake them up and tell them if they got to make an execution. But I mean, again, it's funny because obviously you're on the opposite clock, but listen, and I do a lot of good things. We do a lot of education. I do a Monday night call, which is I'm trying to put the time. It'd probably be about 8 o'clock in the morning, Australia, on Tuesday, which they can welcome to come as my guest. It's a strategy call. We just kind of BS for, I don't know, a couple hours, because it started out as a 1 hour call, and now it's like a whole marathon. But, we go over charts and, what's going on in the world. But, I think the best product for the average person today is our day trader's dream, we call it. It trades the trend. It uses my algorithm. It trades only hourly, and it only trades with what were the original pit hours. Okay, if you remember that the original pit hours in the States, the currencies and gold and crude oil did not open until 8 o'clock Eastern time. Okay, and they closed at either 1:30, 2:30, or 3. Okay, Eastern time, and the equity markets open at 9:30 and close at 4. And that model only trades in those hours. And if there's a trade that is open, it will be closed at the close of the market at that time, because that's the volume and liquidity still live in those areas, and they don't have to watch it, and they don't have to stare at it. And it's a very conservative model, using either micros for our standard run or minis for the people who want to be a little bit more aggressive. And it takes the least amount of capital to play with as well. So very, very well done. But they can certainly reach me at bubbatrading.com. My email is bubba@bubbatrading.com. And if you have just a question, ask me. I'm going to answer it. I love to help teach people. I mean, that's kind of what I do anyways. And I don't need to be always paid for it. I'm happy to answer your questions and share information, because I think the financial literacy in this world, for the United States, first of all, but the rest of the world is not very good. And I think we need to do a better job at getting financial literacy out to people, especially if they are looking for help.
Yeah, I love it. You're such a kindred spirit with us. There's so much here. I really think people need to listen to this again and again, take notes, and take into account everything that Chris and Bubba have been talking about. The world is going through a transition, and you can survive. You can make it through. You just have to make sure you've got enough capital to keep playing and cement those lessons as you go along. They are the real keys. So, Bubba, is there anything that you wish I had have asked you, but I didn't get around to asking you?
No, but I would just say that, you can make money on both sides of the market. You don't have to be on either one or the other. And which is why that when markets are doing what they do now, you can make it on the short side if needed. And also remember that when you're ready, if you're thinking of panicking about something, okay, just remember that probably 1,000 others are doing the same thought, and you need to walk away from that thought and learn how to take benefit from other people panicking, and it shouldn't be you. Okay, always take a deep breath before you puke something out. Take a deep breath and say, am I sure this is what I want to do? Because I think you'll find out that more often than not, you'll regret it later.
Yeah, I love it. We often ask our traders to consider what's in it for the person on the other side of the trade, to try and do that pros and cons in their mind, because often we end up so one-eyed and myopic that we can't see why the other person would be executing on the other side. And, it's not black and white like that. We do have to consider all of the data and make that sound focused decision to be able to succeed in this game. Bubba and Chris, thank you so much for joining us on talkingtrading.com.au. If you're listening because you're one of Bubba's traders and you would like free regular interviews with spectacular world-class traders like Bubba, and to hear more from Chris Tate and I, register at talkingtrading.com.au, because we would love to have you in our flock as well. I think you can see there are so many similarities between the way we approach the markets and the way Bubba approaches the markets. And for our traders, for the Talking Trading listeners, please do seek out Bubba, because I think you can see why we've bonded, and it's been instant. You can see the similarities between Bubba, Chris, and me, and it's to do with longevity in the markets, lack of ego, and being prepared to take on mentors and take on other views. So have a wonderful trading week. Happy trading for the rest of the week. Keep your cool, use the data, and do everything you can to avoid ego, because ego is not your friend. We will chat with you next week. Bye for now.